Hello, stock pickers, money makers, wealth creators. Along with my co-host again, Thomas Bennett, I'm Andrew Cox, and this is Beyond the Ticker.
Welcome.
As always, do not consider this financial advice. We talk about our personal opinions, and you should do your own research. So, how's things going, Tom?
It's been quite a busy week for us.
Yep.
Bit of a rebalance of the portfolio at work. So, been in a lot of meetings discussing what we think is going to happen with the markets. So, very interesting times we find ourselves in.
Yeah. I think it has been a really interesting week. We've had a lot of data out. We've had the election, which we'll touch on later. Equity's been everywhere. Aussie dollar's been everywhere. It has been an interesting week. So, I just started my new job. So those of you that listened to the last ones, I was on gardening leave and now I'm back in the workforce. So I counted towards the participation rate this time that was announced. So really good times, really good crew, and I'm looking forward to, flew over to Sydney and now just getting established and getting everything set up and all the teething issues that go along with getting set up and all the systems you need to do when you start a new job.
Coming out of retirement, are you missing the golf course?
The golf course has been missed. Yeah, I actually was supposed to go last Saturday, didn't end up going. Would have liked to try to get out on this weekend, but it hasn't come to fruition yet. We'll see. We'll have to do an after work time.
Oh, very nice.
But there's businesses and there's pleasure, and I need to try to balance that a little bit. Get out on the course.
So, since our last podcast, the RBA has increased the interest rate.
Yep.
Now, I'm potentially looking to buy a home.
Yep.
Sometime in the future. And I'm just wondering, when I'm picking someone to have my mortgage, why there's 99 lenders out there in Australia, why am I going with one of the big four banks? What's the appeal?
I think one of the things is, along with support, it's the confidence in a large balance sheet. So you've got your big four, knowingly CBA, ANZ, NAB, and Westpac. Macquarie really is that they fall into the big four with regards to market cap from time to time, and they're Australia's largest investment bank, and then their own investment bank. The other ones are retail or classified as retail banks, and I think it is just support. Especially on the back of the GFC, a lot of people, got worried about banks going bust and having all their eggs in one basket sort of thing. With the Australian big banks, they do have a big, large balance sheet behind them, and they've got a lot of support and trust from the government as well. And with the smaller, more, I call them weird and wonderfuls and uniques, they offer good products and they can be really suitable. And they're cheaper, and the reason why they're cheaper is because they're not as big. They don't have the presence, they don't have the branch, they might not have the support, they might be fully online, they might have a more simplistic product, so it might just be a mortgage without all the bells and whistles. For example, they might not have offset accounts, or whatever it might be. They might have the capabilities to link credit cards or whatever it is, but that's generally one of the differentiators between the big four and the smaller banks, so to speak. And included in that, if you look at Bankwest or St. George, they're owned by a big four. So, Bankwest actually do have some quite good products with regards to getting home loans. They've got a good complete package where you can have an offset account, and anyone that's actually read The Barefoot Investor, he talks about the Bankwest quite a lot. You can have as many offset accounts linked to your mortgage as you can, and so as you save, you're offsetting your mortgage. So there's a lot of different things with regards to the factors of the big banks, but the biggest thing is confidence and support.
Interesting, because I've always thought, you don't want the bank to go bust, but if they've lent you the money and then they go bust, you've got the money already, so you're not going to lose out. Yeah,
but their asset falls under their balance sheet as well. I'm pretty sure, as a caveat.
Right.
I'm not sure about the legalities of when a bank goes bust and how, as a homeowner, it affects you. But I know that when a bank goes bust and you're a client, it doesn't usually end up great.
It's not good news.
Yeah, Lehman Brothers 2.0.
Very interesting. And throughout the week, Matt Comyn, the CEO of Commonwealth Bank, has come out and said there's a lot of products in the market at the moment that are the way, in his words, too good to be true, but too good to be sustainable in these higher interest rate environments.
Yeah.
So it's going to be interesting to see what happens if some of the smaller players do go bust, because obviously with interest rates rising, it's going to put a little bit of pressure on the sector, and competition's going to increase.
Yeah, that's exactly right. And especially for your banks that do or have done a lot of fixed lending in the last sort of 12 months for because of historical low interest rates, whether they can whether they've mitigated that risk by swapping it out to another larger institution, or if they're holding that on the balance sheet, which means that they're going to be paying less, or making less, or even making a negative, depending on where interest rates going. And we'll talk about, I guess, my prediction or what's been priced in the market at the moment with regards to where interest rates are heading. But yeah, there is, he's right. There's we've had historical low interest rate periods, and we're having a bit of a sharp increase. And if people haven't calculated for that adequately, then it's going to be an issue.
It's going to be interesting. Watch this space.
Yeah, that's it. That's all we can do. So another big news: we've got a new government.
Yeah, election day was yesterday.
Yeah.
Labor was the favourite going in.
Yep.
And Scott Morrison pretty quickly conceded the election to Labor. So Anthony Albanese is in.
So my question to you is it going to be easy with Albanese?
Oh, I like what you did there. I have a very low opinion on Australian politics. I think both parties pretty much toe the same line.
Yep.
There's a few unique differences between the two, but in terms of big picture, big economic things, they're pretty much the same. And we saw this coming up to the election as well, which is, it's a bit of a shame in a way. They're kind of spineless. You don't get the choice of, do you want this sort of economic policy, or do you want that sort of economic policy? It's just, we both do the same, but pick who you like better. Do you trust ScoMo more, or do you trust Elbow more? It's just it's a bit of a joke, but no, because you saw that when they both offered cheaper ability for cheaper houses for first home buyers.
Yep.
One was offering, we'll give you money towards your house, and you just pay that back once you sell your house. And the other party was saying you can withdraw 50k from your super.
Yeah.
So I don't know. I think it's a bit both the same, but there are a few points for Labor to be mindful of. They're investing in cheaper childcare. They're going to upgrade the NBN, which that's an interesting one, because I always thought that the next step is the 3G, the 4G, the 5G network just linked straight to everyone's houses. Because so many times now, my mobile phone is quicker than the computer, and I end up just hotspotting my computer anyway. And with increasing data sizes for that, I don't know if the NBN is going to become redundant. That's going to be interesting. But other than that, I don't think it's going to have much impact on markets. What do you think?
Yeah, I think more the same. It's tit for tat, really. It's very minuscule differences, like you say. I mean, it's certainly in the current economic environment, and as I said, I'd alluded to later. I see in sort of the comments of the winning individual, Anthony, that now we're going to have high inflation, and we're going to have a whole bunch of hikes, and at the end of the day, the government that comes in now is a slave to what the economy is at the moment, and there's going to be already there's priced in 25 basis points for the next 3 months of cash increases, to control the inflation. Inflation's already there, so it's quite funny that the blame game on the economy already starts to happen when it's already coming. So it's just quite funny to see some people's reaction and opinion to situations when there's a bigger thing out there, and what, like we say, do your own research. When you do look it up and you see it, you understand what things are and what things aren't.
It's very interesting you say that, because historically speaking, Labor is categorized as the worst economic leader of the two parties. In terms of pushing the economy forward. But we on the Beyond the Ticker podcast, we've seen a lot of these problems bubbling under the surface for quite some time.
Yeah.
And I think ScoMo's pretty lucky to just kick the bucket down the road for 4 years, and now it's about to boil over. Like, inflation's increasing.
Yep.
You know, there's going to be a lot of heartache. It's sad to say, but I don't know. One way or another, someone's going to get burnt over this next year period. And
Yeah, I mean, we've seen a lot of volatility in markets over the short period of time, and I think it's going to be more to come. With the depending on what the expectation of the equity market is and how much interest rates are going to continue to go, where the peak of inflation is, has we seen it? Is there more to come? It's really going to dictate what's going to happen and what the controls of the RBA and other central banks and also the government with regards to stimulus, and how that's going to operate. I think that they both parties come out with a first home buyer option because of the huge increase in housing prices. But also, I think that that might be well timed to try to reduce the effect of a big fall in the property market. With massive increases in cash rates, you could see serviceabilities, people's disposable income just being completely torn up. Which
is a shame, isn't it? Because it's a classic economic problem: supply and demand with the house prices.
Yep.
There's not enough supply, prices going up. They're increasing demand to try and fix the problem.
Yeah.
They're giving the people the potential to pay more money for the houses. So housing prices are just going to go up further.
Yeah.
This is a short-term fix for the house prices.
That's right.
And long-term, the next generation is going to suffer even more than what this generation is complaining about, which already for you and I, we are in quite fortunate positions where, we're pretty money wise, and it's challenging for us to get a house, right? For the next generation, I don't know.
Yeah. I mean, and you look at the amount of people that are going to be, as the economy grows and more people, there's more population, so yeah, it's a classic thing. It's almost like a bubble, right? Like the more you try to have a change
artificially stimulate it.
Yeah, artificially have an impact on a market, it never ends up well. Markets have to react naturally for them to be able to work in the way that they were designed to work. As soon as you start adding injections of stimulus or whatever it is, or changings of policy that isn't sort of beneficial for the market, then there's going to be some issues.
Bit of a radical policy idea I've just thought of. I'll run it past you. What would the effect of removing stamp duty have? Like, stamp duty is obviously the tax that you pay when selling a house. If that was removed, right, makes it easier to buy and sell a house because there's not as much, cost involved. Because it gets about 25k.
Yeah, on a 500k property, it's about 25 grand, million, 50 grand. So,
which is an incredible amount of money just to transact something in your name. So if stamp duty tax was removed and it allowed people to buy and sell houses more freely, would that free up some, vacant properties that people are obviously holding on to for certain reasons?
Yeah, I think so.
And then also reduce the house prices at the same time?
I don't think it would reduce it. It would probably increase it, because then people can have a bigger deposit for the property. Because you're under the assumption that people will save that stamp duty and put it in another investment vehicle. But I think that people generally try to go to the edge of their means when buying property.
So it's almost a sickness of the mind. We've all got to not want the biggest and the best that we can possibly buy within our budget.
Yeah.
We need to all limit our expectations a little more.
If everyone just dropped it by 20%, say you can afford a $1 million house, but just bought an 800k, that would.
It's an interesting thought, isn't it?
It is. It's but it's just the way that people operate, right? I mean,
we want more.
Yeah, that's right. We want more. So it's it's like you said, it's going to be worse with the next generation. Not to poke fun at them, but yeah. So the other thing was markets, equity markets.
It's been a very bad week.
Bad week for equities.
Bit of red. are you as an investor getting scared? Do you want to buy more? What were your initial reactions to the negative week?
So I saw it started coming down. Obviously, I'm not sure. It was Monday, Tuesday. It was Monday. Then Tuesday, we had a couple of big back-to-back bad days. And on, I think, the second or third, I bought a little bit more, and was hoping it would go down, and I was going to buy a little bit more again. We did have a bounce, and then we sort of come off again, and then so now I've sort of been jumping up and down the last couple of days. And Friday we ended up with a bit of a positive for the overall market. I just try to keep things consistent, and if I feel like the market is going down, I'll try to try like my AGL play. I just try to keep averaging it down till the bottom, and maybe increase the buying by 20% over that period, rather than when we're in a higher state of the market than I normally would.
So slowly buy on the way down.
Yeah, I mean, you never know. Yeah, probably a bit more frequently, I think, because things are more discount. And I don't buy into the whole buy at the dip mentality, but it's more because my investment strategy is long term. So when the markets are down, it's I want to be buying more of the shares as I can.
So interestingly, when it started coming red, I was thinking, why? And then I was reading news articles. Oh yeah, it's inflation. But we've known about inflation for a while. It's been around.
Yep.
We know what inflation is. Prices increasing. We know what effect it's going to have on businesses. Are they going to have to pass on the cost to the consumer or absorb the cost themselves in the balance sheet? And Target and Walmart have both released their annual report or quarterly report in America, and that was the start of this pullback in equities, because they said in their report, our revenue is lower, our income and what we're earning is a lot lower because the prices are going up. We're having to pay more for shipping, we're having to pay more for the goods, and we're going to have to pass that on to the consumer. And the market almost took that as being shocked, which surprises me because we've known that's been coming along.
Yeah. I've had this conversation with you before with regards to how forward-thinking are markets.
Because theoretically, markets are very forward-thinking, and whatever has been discussed or is predicted should theoretically already be priced into the market.
Yeah.
Like, for example, with the cash rate, that should theoretically already be priced into the market, that the interest rate is going to be at 2% by the end of the year. That should already be priced into the market. So when the RBA comes out and increases the interest rate, we know that's going to happen. So why are investors shocked? Is it?
The media fuels it, obviously, when it comes out. There's article pieces about it. I mean, this is just my opinion, but investors generally don't have their finger on the pulse. I mean, we're really close to it. We're real close to the information. We see the information, dissect the information, and then we wait for the effect of it. And it might happen gradually, but until there's something right coming out that's hard, black and white data from a company, does the effect say, okay, they're here? And I think that's really where the reaction comes from the retail investors front, and also, probably from the wholesale, but I'll say more so from the retail investors front. And also, it's also a sign of uncertainty as well, because there's a lot of things happening in the economy at the moment, and people are unsure about what's going to happen over the next 12 months. People are saying X and Y, and there's a huge difference in scale to that. And so I think that a level of uncertainty brings up a sell-off of certain things and assets where they might want to hold on to cash, or where they're safer with it, and or find an asset class that might be more suitable to the uncertain environment that we're in. Certainly in those sort of environments, from a currency standpoint, the Aussie dollar generally gets sold off because it's considered a more risky asset, so your USD and your yen and your euro get bought up. So with that sort of effect, I think it's I think that's really more it is that although it comes to fruition and it happens, I think that the actual black and white number is then telling people, hey, it's happening.
And it's very interesting, isn't it?
Yeah.
And on that, when you're saying people are starting to look for, alternative, safer investments, we've also been seeing that with fixed interest.
Yep.
Now, for the first time in our lives, fixed interest is now offering a enticing yield. So fixed interest is buying bonds, stocks, the debt. You're buying the debt of a company, a little IOU. And up until now, with interest rates being so low, you're really getting no return whatsoever on the yield. You're getting 0.5, 1 point something,
pennies,
which you're pretty much getting as much in the bank. And then when you look across the equities, they're offering 4.5% dividend yield, meaning you get 4.5% of what you invest back every year. Nice little check in the mail. There's no real incentive to go buy the debt, especially for us as retail investors.
Yeah.
Just entering the market, it's too big and complex. But now that we're seeing yields at 3.5% for Australian government bonds, why not go and put some money into Australian government bonds and get that guaranteed 3.5% over the next 10, 20, 30 years. It's an interesting time in our lives and in the wider market for investments, and there's even more options of where to put your money.
Yeah, and it's, you touched on it perfectly with regards to sort of the time, because the data that we're seeing that's coming out, we haven't seen for 50 years or 40 years. Or so, for example, we had an unemployment rate of 3.9 that came out midweek. It hasn't been in the threes, and that was 3.85 rounded up to 3.9. We haven't seen it in the threes since 1974, or in between 1972 and 1974. So that's a huge amount of time before we've ever been in that sort of area. And so you have to look so far back to the economy and what the effects were with the data and how that sort of is transpiring. So, and it just leads back to sort of the uncertainty of it all, because there's how many people were actually trading 50 years ago still in the market, most of those people will be retired. So
now the participation rate as well is a lot higher. Yes. Before our time, there was a lot more barrier to entry to the stock market. You'd have to physically go to a stockbroker and say, I want to invest this. And that obviously comes with larger fees. So you want to make more of a return to even recoup your fees. But now we can trade on CommSec for $10 a trade. Every mum, dad, Joe Blow can get involved in the stock market. So I feel like that has a different effect as well. And I feel like, as we discussed before, why has the market been shocked? I think the increase of the retail investor in the market, they're not as experienced, and they react more quickly, more viciously to just what they see in the news. And if you, as a retail investor, haven't really seen this inflation coming, then you see in the news, this company that you hold 50% of your holdings has dropped 20% because of inflation, and you panic and hit the sell button. It just exacerbates the problem. Yeah,
no, exactly right. Exactly. Yeah, and I just think back to when we had the increase in the first cash rate, when we knew it was happening. Like, I mean, it was what number was it going to be? I mean, it was really...
the number did shock us, though.
Yeah.
We thought it was going to be 1.15.
Yep. Yeah, I did put my money on 0.2.
Yeah.
I did think... 0.25. I did think it was going to be 0.25, but then I also had people thinking that it was going to be lower. And I also had people around me that thought it was going to be higher.
Interestingly enough, the Reserve Bank minutes came out, where obviously that's where they discussed what they were going to do. And quite a lot of them were thinking 0.4.
Yeah.
And so we were pretty close to having a 0.4 rate increase.
Yeah.
Which that would have really shocked the market.
It was, would have been quite high. My thought process around it was that it was the first rate increase since the beginning of COVID, and I thought that, they'll just put something out there to show people that they are doing it. And subsequently, it's going to be, there'll be next 3 months is expected that it's going to be 3.25. So I'm really excited to get the front cover of the media when that happens.
Yeah. I'm I don't want to say I'm excited to see what happens in the housing market, but Australians are heavily in debt. Like, household debt in Australia is huge, especially comparatively to the rest of the world. And the Aussie housing market's huge. So I'm very interested to see, will we be able to weather the storm of higher interest rates? And I feel like it has to be done. You can't keep interest rates low in these high inflation environments. But at the same time, as you touched on, unemployment rates come out at the lowest level ever, even lower in WA, 2.9% unemployment. So theoretically, if you wanted a job, you should be able to get a job.
Yes.
Theoretically. That's what that number says. And as well, theoretically, you should be able to negotiate higher wages.
Yes.
So is this going to have the offset effect, or is it going to make the problem worse? Is it going to increase inflation, given we've all got more money? So we're all going to still continue to buy and then push the price of the products up, because if the demand's still there for these higher priced products, the price is just going to keep rising.
I mean, that's a scenario that I think nobody wants to get into, where you're now having to pay workers more, and then you're having to sell things more, then you're having to pay for your cost of goods more, and in turn you have to pay your employers more. It becomes cyclical, and then you how do you get out of that cycle?
It's a dangerous cycle.
Yes, very. So there needs to be a chink in the armor somewhere. So
the opposite's also scary though. So that's on one side, where you just have growth and you have inflation and it just keeps going. But the other side is something that's been thrown around in the media a lot at the moment, and that's stagflation.
Yep.
Where you have stagnant growth or decreased growth, and inflation at the same time. So then you've got the Reserve Bank in a very awkward position, because they want to stop inflation, but growth is at nothing, meaning GDP is not growing, Australia's not making more money than last year. And then by increasing the interest rates, you're then decreasing that growth even further. So as an economy, we're going backwards. And then you get a situation like what's happened in Japan over the last 20 years. They've had deflation and stagnant growth. And Japan's almost uninvestable at this point because of that. Because they've just had no growth for 20 years.
I don't want to give the wrong number, because I don't know what the number is, but go look it up. Their central bank owns so much of that economy. It's insane.
Yeah, they're buying shares, they're buying the fixed interest. And the idea behind that was that, no one's making money, the investors aren't making money, the economy's not making money. So the Reserve Bank had to step in and pump money into the system by purchasing the fixed interests and the bonds, and then into the shares as well, which we see it in a smaller extent in Australia, when the Reserve Bank wants to stimulate the market, but now we see that they're selling down their balance sheet again. They're selling what they bought through the pandemic, but it's just at a whole new level in Japan.
Oh, it's crazy in Japan. Yeah.
But good time for a holiday to Japan, because the dollar is it's pretty cheap.
This is very true. The one thing I will say, though, just while we touch on it as a last point, because we'll be speaking about government, I did think that the government JobKeeper during the pandemic was probably one of the best in the world, with the way that they supported businesses and they also supported individuals being employed, and it was a way to keep the economy ticking when they stopped the economy, basically.
I think we're all pleasantly surprised of how well we've done in the pandemic.
Yep.
And how well those payments were set up, not only to support businesses, to support the workers, but also coming out of the pandemic, how easily it's been unwound.
Yeah. Yep.
And, it's just gone back to normal. It was very impressive.
Yeah. I think that from a government standpoint, and whatever you'll say about whoever which way, that was done quite well. I think everyone would admit that. And from my personal opinion, Scott Morrison probably could have had another term just for his involvement with that.
Another term in Hawaii.
Yeah, exactly. There you go. All right. Well, I think that's all much time we've got for. But it's been excellent talking to you again, Tom. And
Wonderful talking to you as well.
hope you guys all have a good week. Speak to you soon.